Bitcoin still in a downtrend for the year end 2025. Hasn't been able to get a whole lot of things going on the bullish side, if you will. We did have 3 weeks of downside after we set the low on March the 10th. That was the yearly low and the low for March. Then we had 3 weeks of upside. This entire down move, this red candle that you see right here, this entire thing came from yesterday and today. Yesterday was Friday, today is Saturday. We did have an absolute phenomenal short setup that occurred on Thursday evening, which was the Friday open. Basically what we did all week. If we drop over here to the daily real fast, you can see right here is Monday. This is your weekly open. We initially tested the weekly 21 exponential moving average. The way that I decide whether or not I want to be bullish or overall bearish on a chart is, well, first I analyze the trend and then I use that indicator to basically tell me who has control of price, who has the momentum. Though we did get a 3-week move higher, Bitcoin was still in a downtrend. As long as you're below the yearly open, which is right up here at $93,347, you are bearish. We are bearish on the month as long as we're below March's open. We're bearish on the quarter. We got a new quarter candle opening April the 1st, which is going to be on Tuesday of this week coming. So on April Fool's Day, we're going to get a brand new quarterly candle open and a brand new monthly open. But as of right now, looking at Bitcoin with this year's data only, you're down on the year, down on the quarter, down on the month, down on the week, and today you're down on the day. Going back to the perfect setup I was discussing in earlier, this is in hindsight, it is, and I did not make this trade. I had to take it Friday morning. I was out getting pizza, but I was watching that line because that's where the weekly 21 exponential moving average is here, delineated by this gold line. It says it right there, weekly 21 EMA, and then the previous week's high. This was your previous week's high right there. Now, this was a flawless place to be looking. We did get above the 50 on the daily time frame only. We did close a daily above the 21, the yellow exponential moving average right here. The other two moving averages are 200s. Your purple is your 200 EMA, your red is your 200 simple. So this is a bullish signal when you get above the daily for near-term trades only. For potential day trade scalps to the upside, my rules will allow me to start looking for longs once this occurs, as long as the very next day does not make this day a trap. If we take out the low, then it's a trap. Now, in a bullish trend, if price gets up against the resistance level and starts to consolidate like this, that's usually a sign that you're probably going to see a breakout. But in a bearish market, you can't get too uppity until you get the breakout, and then you want to see that consolidation happen above whatever resistance level you're looking at. So in a sense, yeah, we did have a kind of a near-term bullish bias here, but knowing that we could not close a single daily candle above the weekly 21 exponential moving average, which is my line in the sand for, do I want to approach this marketplace with a bearish bias or a bullish bias, especially if we're under the yearly opening range? You take all those factors and you put them together, and it does not matter what happens. As long as you are following the technicals, following price, following the signals, then it doesn't really matter if people are hacking Ethereum or if Trump is saying this or if the Fed's going to do that. Price determines who the winners are and who the losers are. If you translate what your analysis tells you when you're looking at the chart to money or financial gain, then you are correct. When we're analyzing price, we're doing that for one thing, not to make correct calls on Twitter and YouTube. It's to make money. It's to grow the P&L. So when you look at your charts, if you look at them objectively as you can and try to just focus on what is objectively happening in the chart, and you stick with that, you will do better than most people out there who are worried about what is or what ain't happening. This was the short entry that I was saying that was the absolute fantastic entry, because we was up against resistance for 4 days and could not get anything going through here. Now, the reason this is important is because on this day right here, risk markets made this day into a bull trap. I will show you that when we get over to the risk market chart. So even though we didn't have a pretty bad down day on Bitcoin on Wednesday, it was pretty bad on risk. So that right there just basically tells me I want to be getting short going into resistance. And then it gave you a flawless setup right here. Like I said, I had to wait until the open, or the 9:30 open, the New York session open at 9:30 before I actually took the trade at like 8:30 because we got bad PCE data suggesting higher inflation. So I went ahead and took the short. I'll show you that. Let's go to the 1 hour. So here we are over here on the 1 hour time frame. We're going to close this stuff off that we don't need here. And I'm going to show you the open. It's right here. Thursday's close happens here. Boom. So as soon as this little candle right there closes, that's it for Thursday's candle. Right here. When this candle closed, Thursday's candle's in the books forever. It will never change. That data will always be the same. Then we go into Friday. This is the open of Bitcoin's Friday candle. Previous week's high is resistance based off of a rejection happening from the daily time frame, rejecting and not being able to close the daily above that. So this is the level that we're using to mitigate our risk from, or we're going to. Like I said, I was going to get food at this time. So when I came back, I already missed it. I'm not going to chase price. And you can see this 1 hour check right there. That happened at 9:00 p.m. You get a wick up into previous week's high. Since this was happening at the open, since I was bearish, I probably would have taken that short. Coming down here, this was the next area of potential setup. I didn't love it. I would have liked to seen a deeper retracement back to the upside to then look for potential shorts, maybe from this area here. We got the PCE data. We made a swing high up there. That's my entry. Let me put this chart on a 1 hour time frame up top so you can see that very same thing. And there you go. There is my entry. This is weeks. This is a real money account. This is my trading account. Now it is the weekend, so I'm not expecting a massive move, but we've already seen a pretty decent sized move today. 5 o'clock in the morning. You were inside the range, the overall range being this section of price here. That's your range. This is your breakdown candle right there. So you lost intraday support with this candle's close. So this is a breakdown. Now, if this was going to be a liquidation run, then you would have expected to see this transpire after, but we didn't. We got downside continuation, and then 1 more hour downside continuation. So it does look like Bitcoin wants to head lower, and we know that it's in a downtrend. We know we lost the only bullish signal we had, which was a daily close above the 21. That was it. We had no other bullish signals, none. We did not have any bullish momentum up here, which that's what I want to see after we get the bullish signal. I want to see us get momentum starting to go in the up direction, because that tells you you got the bullish signal and the algos are buying it, right? Robots are buying Bitcoin. That's why it's going higher and higher. That doesn't mean the sellers won't come back, but with the price action that we seen last week, so annoying because there wasn't no buying going on. And we know that because here we are today and we're lower. Right now, you're currently testing last week's open. Will this act as support? It is possible. 82562. So that's the week, that's last week's open. That's a very important price moving on. All right, so moving on, here's that test of the 21, and there's the failure. And once that happened, once we broke down on Thursday and going into Friday, once we got that bad PCE news, then I pretty much had a feeling it was over. As of right now, look at this weekly, right? You lost the 21 here, and it took you 3 weeks to get back up here for a retest, and you're failing. Is it possible that this whole entire weekly candle becomes a bear trap? Yeah, it's possible. Since these 3 weeks didn't have much of any range whatsoever, it was very sideways, choppy price action. You've got weekly support setting at 82,560 or 80,708, sorry. 80,708. That's where you're going to have the final weekly support. If you close below that, then you're more than likely going to take out that low, March 10th low. And if you do that, you're going to have another fresh yearly low. But this is a clear, obvious rejection here of the 50. This is anything above the 50 is considered bullish. Anything below it's considered bearish, or it's not considered bullish or bearish. It just means that you have more bullish momentum or bearish momentum in price and the way that price is moving. It doesn't necessarily mean that it's going to keep going in that direction. But these are the important levels to watch on the very, very near term. Now, on Sunday, we had a members only live stream. We do it every single Sunday. This is Sunday's live stream. So if you are a bear and you are looking for shorts on the S&P 500 next week, I don't think you have a trade until you get up to January 2025's low, as that would be the expected weekly range high. And if you are going to put shorts on, that's probably where I would do it. I don't think I could short it any lower than that. I want to see a rejection here, which we did get a rejection there. Here's that Wednesday that I was telling you. Bitcoin was an inside candle pretty much. Like, it was trading inside of Monday and Tuesday's range. I mean, it wasn't a full-on inside candle, but it was trading inside the weekly range. This was your weekly open. That was your weekly high. And then on Wednesday with Bitcoin, you made a lower daily high. So you were trading still inside the weekly range. Whereas on the S&P 500, you made this bullish breakout here, trap. And then you got downside continuation on the next day and downside continuation on the day after that. But this is the green line and Jan 2025's low that I said this is where the short trade would be. And that's where it was. If you were a bear, if you were looking for shorts, this is where you would want to do that. It was a flawless signal for a short. You're still under the 50 on the RSI on the daily time frame for the SPX on this day. Like, Bitcoin had already broken above the 50 but wasn't getting any bullish continuation above the 50. So you have to interpret what you're actually seeing taking place on the chart. You have to be able to interpret that. You can't listen to a bunch of other people to fill your head with these ideas. Well, maybe it's bullish up here. It's not. You're in a downtrend. This is at best a bearish pullback. Just like in uptrends, you get bearish moves in uptrends. Those are usually bought into. In downtrends, you get bullish moves that are usually sold into. And that's what happened here. You got a bearish pullback and the sellers showed back up. Wham, bam. Broke this trend line easily. Very much easily, but still close the week out inside the weekly expected move. Your next week's weekly expected range high, 57.24. Now, you don't have as much confluence with a major level like we did last week or the week we just had, being Jan 2025's low. You also have Q4's open there, which is quarterly supply. So a pullback up to this area would have been a potential short based on just supply demand dynamics. Let's be clear, a quarterly candle might not get like a very great sell signal off of that on the daily time frame. You close the daily above it here, you closed another one there. Now, this would have been fine. You could have mitigated your risk that way. 54.36 is your swing low. for the weekly expected move. Now, this is just a measured move for the expansion of March. March's range. This is March's high. This is March's low. So if you just draw an arrow from that swing high to the swing low, copy that same arrow, put it over here at this swing high, your potential measured move would put you all the way down here. But here's the thing, there's only a couple days left on March, in March. So I'm not looking for this to happen this month. I'm not looking for this to happen anyways. But if it does, that gives you a low end target of 70K. So be very, very careful if you're buying the lows in here. There is a measured move to be had, and it could potentially happen. So you have to keep that in mind. All right, so we're not going to be looking to be bullish scalpers anymore unless we close in dailies back above the daily 21. Until that happens, we cannot be bullish. I can show you a couple other instances where we had fantastic trade setups this week. Apple, not so good. Microsoft, absolutely phenomenal rejection at the 50, just under March's open. This would have been your resistance. You would have been watching for the bearish entry. Like I said, I'm not selling every daily res, just the ones under the bigger time frame levels, the ones that matter. So this would have been the level for the short, and you can see that you clearly got that rejection there. Very next day would have been your signal. As you took out this candle's low, that makes this candle a bullish trap. Usually when we get the traps, we do want to see a slight peekaboo above the 50 and then the fallout. But this was just a full-on, it just stopped right dead in its tracks right there. The reason it's a trap is because you got the bullish close above the 21. Microsoft gave you one. Amazon gave you one. Boom. Same day. Same exact day. Google gave you one. Boom. Same day. Same day. Those are pretty much all the trade setups from last week. I did trade Bitcoin. I am in a short still. I am going to hold that position as I see no reason to close it. Not yet. All right, so that's pretty much it. Let's go get the levels to watch next week for any potential short entries. Obviously, my big one going forward is going to be March's open. Now, if we're back up in here today or into tomorrow, I might wait and see how it goes. But if it's showing me on an intraday basis an inability to close like a 4-hour candle above March's open, then I will probably take another short there. He's the source on the ETH hack. It's the reason he thinks price, or they think price is dumping, is because of ETH hack. Well, they must have also hacked the SPX and the NQ along with Bitcoin, because those things also fell last week. It's because you're in a downtrend. The sellers are in control of price. You can come up with reasons if you want to, but like I said, it's better if you just stick with the technicals, stick with price. You'll have a much better time finding those absolute fantastic entries. Thank you all so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.